Hi everyone, welcome to another episode of ET Smart Investor, where we talk about everything related to your investments and more with our experts. I'm Neha Vashisht from ET Markets, and today we have Dr. Mukesh Jindal with me, who is the co-founder of Alpha Capital. Thank you so much for joining us today on ET Markets livestream, Dr. Jindal.
Thank you, Neha. Thank you so much for inviting me to this talk show. It's always a pleasure to be here and share my insights with the audience. Thank you.
Well, the pleasure is all mine. So, for the audience today, we are going to discuss multi asset funds in depth and what are the pros and cons of these funds and more. So, to start with, Dr. Jindal, what is a multi asset fund?
So, Neha, talking about multi-asset fund, these funds are also known as multi-asset allocation funds. And they have become popular in the last few years, and we are seeing good inflows in this category. Now, if you look at the SEBI definition, which came out for the multi-asset funds in October 2017, it said that a multi-asset fund should invest at least in three asset classes, with minimum exposure
Okay.
being 10% asset class. And normally, what these fund managers they do is that they put higher allocation in equities. Equities is on an average 60-65%. Then they have debt, which are normally these two assets becomes a foundation, and then they add a
Mhm.
third asset class, which could be gold, silver, it could be REITs, and it could be international equity. So normally these funds are combination of different asset classes, and the weight of these
Right.
asset classes are dynamic and they keep changing. And what we have seen is that it depends on the outlook of the fund manager, in the sense that if the fund manager feels that equity is going to do well, so he'll increase the weightage over there, or if he
Mhm.
feels gold is going to do well, he has the provision or the option to increase asset allocation in different asset classes. Now the question mark is, why is this becoming more relevant? In the sense, we spoke about multi-asset funds, and lately why they have become more so important. Now I feel that this category is more important primarily because of three reasons. And one is the importance of diversification. There's an old age saying, don't put all your money, all your eggs in the same basket. And I think that's also
Right.
valid for finance and investments. One needs to diversify. See, at a given point of time, maybe one asset class is doing well, but it will not always continue to do well. Like equities, you will
Absolutely.
have some years when equities are down. Now during those years, debt may be doing pretty good. Like last year when equity and debt
Mhm.
both were not doing well, gold was doing well. So
Yeah.
diversification helps in ensuring that there is something in the portfolio which is doing well, and you're getting some kind of average kind of return. So diversification
Mhm.
becomes the core foundation for these category of funds. And then also, the second important aspect of this is that the research also supports the multi-asset allocation funds. There was a interesting research paper from two guys, Ibbotson and Kaplan, which was published in US in 2000. Now what they found out is that the primary reason derives the portfolio return is asset allocation, which contributes 91% of the portfolio return. Contrary
Mhm.
to the popular belief, the market timing and stock selection doesn't matter. So the fund managers are saying, or the fund houses are saying that, why don't you invest in this fund, and we are taking care of majority part of the return. And last, the most important factor being, okay, we understood the importance of diversification and asset allocation. The challenge is people don't have the time, the bandwidth, or the
Right.
experience to do it on their own. And that's where you have a simple product where you say, okay, don't worry about diversification or asset allocation, you just invest in this and we will take care of this. So that's why this is a very simple product, popular, which is we are seeing it is becoming popular. A lot of inflows are coming.
Right. So, just to talk a little bit more about multi-asset funds, what are some pros and cons of a multi-asset fund? Everything comes with the advantages and disadvantages. What are your thoughts on the pros and cons?
So Neha, this is one category which has many pros and cons, and a lot of them are subjective. And some people feel that this may be advantageous, maybe it's a disadvantage. But let me start with the pros. See, the most important factor is that these funds are simple and convenient. Okay. And you don't have to worry about any investments, valuation, anything. You just put the money, your money gets diversified into different asset classes, and the portfolio manager is taking care of it. So simplicity, I think, is a very big advantage. Second big advantage is that, once the investor has invested in this, he doesn't have to be active in the markets. He doesn't have to actively manage his portfolio. The investor can go on a holiday for 10 years, and if he come back, the fund will be still there doing pretty well. So I think that is another big advantage. Third is that this fund reduces the role of financial advisor. See, typically financial advisor, they do financial planning, they'll diversify, they'll do asset allocation strategy, they'll do market timing. But unfortunately in India, 99% of the people don't have financial advisors, because to get a good financial advisor, one needs to have a portfolio of, let's say, at least 50 lakhs, 1 crore. So majority of the people in India don't have access to financial advisors. And that's where this fund comes in, and you say, okay, you don't have advisor, put the money, and we'll take care of the basics. So from that perspective, it becomes really attractive. Fourth advantage is that, see, it's a less risk product compared to any other equity or equity linked investments. You won't see very sharp drawdowns or corrections in this fund. The volatility will be less. Of course, it will give you accordingly. It won't give you very high return, but it will be less volatile, and you will have less of surprises. So I think that is an advantage. The other advantage is that the portfolio managers does market timing on your behalf. That's what they promise. I hope they do it correctly. And so what they do is they will buy more equity when markets are down. They'll do profit booking when markets are up, which are very difficult to do. So they are doing it on your behalf. And what we have seen in the past also, these category of funds, they do very well in the volatile market. Let's say you have a year when market did not go anywhere, it was flat. But these fund managers still give you good return, because they keep changing the asset allocation. They keep booking profit when market goes up and keeps buying when markets go down. So they do very good in a range bound volatile kind of market. And of course, the last advantage which I can think about is the tax efficiency. And because when you change asset allocation in your own personal portfolio, you have to pay tax. And over here, the tax is not applicable on that. And of course, there are other tax advantages, like on the debt component, normally which has become taxable after 1st April, it's taxable at the equity rate. So it has some tax advantages as well. So you can see there's a long list of advantages, but this doesn't mean that everything is, good about this category. It has its own share of disadvantages. So for example, one advantage I spoke about, it's less volatile, but it's a subjective thing, because if the volatility is less, nothing is free. The return will be also less. So, this fund will give you on an average 9, 10, 11% kind of return. And so, not very high kind of return. Now, second disadvantage is that in a rising market, this fund will disappoint. Let's say, in the current uptrend, the market, equity has gone phenomenally well. Funds are giving 30% return, but this may give you 10, 15% kind of, 10, 15% kind of return. So, it drags down the overall return. So, diversification means less return. The other disadvantage, Neha, is it's expensive. Excuse me. The other disadvantage is that it's expensive. Normally, multi-asset allocation funds, they have an expense ratio of 2%, 2.25%, which according to me is on the higher side. See, if you invest in debt funds separately, you will be paying an expense of 0.5. If you're buying gold separately, let's say sovereign gold bond, you don't have to pay any expense. But over here, you end up paying 2.25% for the whole bucket, which is expensive. Today, you can buy low-cost, equity index funds. So I think from a cost perspective, it's on the higher side. Ideally, the cost, I would have loved it if, the cost was down to 1%, but this is on the higher side. So these are some of the,
Okay. You were talking about returns for multi-asset funds. So multi-asset, you said 10 to 15%. First of all, I would like you to tell us that what is the duration we are keeping for this 10 to 15% of returns?
See, I'll just correct into that. The return expectation from a multi-asset fund will be somewhere approx 10%. And I think they will vary 9 to 11% kind of return because it has a mix of equity, debt, and gold. And you have an expense also which gets built up. So I think a fair, reasonable expectation will be around 10%. And I think that is something which is important. And in terms of
Okay.
time horizon, I think it's important that investors should look at this category from a 5 years perspective. See, with the majority of the portfolio being in equity, you need time horizon because in short term, it can be disappointing. Some people say that this can be, invested even with a 3 year time horizon. I'll not really recommend that. And because let's say in 3 years market is down, where the probability of market being down is very high, then this category will underperform. So if you have a 5 year time horizon and you have a return expectation of 10, 11%, I think it's a good category to invest.
All right.
Yeah.
So I also want to discuss about multi-asset funds in the sense that a lot of people as an investor might have questions that why should one go for these funds instead of, investing in multiple assets separately? Because in these funds, we have a set weightage for each category like equity, debt, and gold, etc. So why? Because if you invest separately, you have that wiggle room to choose how much you want to invest. So what is your thought on that? How is it better than investing in separately?
So Neha, this is a very, very important question, and a lot of people ask this question, and I think that makes a big difference. And I think the answer for this is different for different people. And a simple example for this is like going to a subway. So when you go to a subway to eat a sub, now you have two options. Either you can order, the prefixed menu sub. Let's say you're ordering a veggie delight, and you ask the chef over there that you make the predefined menu, and he will put everything and give it to you. The other option is, you can get it customized on your own. Let's say if you're health conscious, then you will go for, brown bread, and you'll go for sauces which is low on fat and all those kind of thing. Or maybe if you like tomatoes, you will get more tomatoes. If tomatoes or onions are healthy for you, then you will opt more of that. So it's your choice, right? So similarly, what happens is that if you ask me where the multi-asset funds are, multi-asset funds is a kind of sub with a set menu. You're right, it has equity, debt, and different asset classes where the asset allocation keeps changing, but the menu is set. Now, this set menu, like when will you order a set menu sub in the subway? So when you don't have time, you don't have much of time, you just go and say, okay, give me that veggie delight and make it.
Yeah.
That is one. Second, you don't have much of expertise, you don't know what is good, and you say you trust the chef and that whatever he will make will be fine. So similarly, in this category, I think this multi-asset funds is great for conservative and moderate investors, or someone, let's say, who doesn't have the time and the expertise of selecting asset classes, selecting different funds and managing it, and he says, okay, I'm fine, whatever menu which we're getting. And these menus are not bad, in the long term. As I said, they'll give you 10-11% kind of return, will do its own justice. But let's say someone who is a very experienced, very aggressive, or very expert kind of investor who has its own time, then he can select the asset classes based on his view, do market timing, pick up stocks, pick up equity funds. And so it all depends on the type of investor you are and how much time you have.
Absolutely right. So next, I want to discuss about who should invest in a multi-asset fund. Who is it made for?
See, I think it addresses the issues of many people, and who can look at this category of fund. One, new investors who want to invest in the market, who want to participate, because if you personally ask me, though I am a financial advisor, I work in this industry, sometimes it can be very overwhelming. So many products, so many funds, you get confused. And when you have too many options in the menu, you say, just leave it. I better leave it. And, that's a big, deterrence for the investments. So I think this category is a very good category for investors who doesn't know much about investments, who want to start investing, and who want to experience the investment world. For them, I think it's a very good category. That is one. Second, I think it's also a very good category for conservative or moderate investors. Let's say if we talk about conservative investors, have most of the money in their FDs and all, or insurance policies. We have seen investors who are investing for 20 years in fixed deposits or insurance policies, and they end up getting 6-7% kind of return, and post-tax it's even much less. So for these investors, who want to enhance the return, see, because inflation is there, government reports 6-7% inflation, experience in inflation is 9-10%. Look at the tomato prices, they've gone crazy. Yesterday I was seeing somewhere 1,000% inflation on the tomato and all that kind of stuff. So, when the inflation is running so high, your portfolio has to work harder and you need a better return. So I think those conservative investors who are not being able to increase the equity allocation, I think for them it's a fantastic product. Even for moderate investors, I think it's a super product. Then it's also suitable for someone who has a longer time horizon. As I said, it's a minimum 5 years is required. I think that has to be kept in mind. And last, people who doesn't have the time, the expertise or the experience, for them it's a fantastic product. Start the investments, and I can tell them that go on a holiday in Miami, London, wherever you want, and come back after 10 years. This won't disappoint you. See, this won't give you the highest of the return, but it won't give you bad return also. You'll feel like, it's a good return. So I think this is a kind of product which helps you with that.
All right. So next thing I want to discuss is about taxes, which is a very important factor when it comes to investments for anyone. So is it more tax friendly when it comes to multi-asset funds?
See, the taxation is a very big aspect, and I think after 1st April of 2023, when the tax rules have changed, this category has become further more attractive. See, basically, Neha, this category of funds normally have an equity taxation, and it depends on an average what kind of equity allocation the fund manager keeps. As per the income tax guidelines, if a fund keeps 65% in equity, then it qualifies for equity taxation, and most of them do it. But some years, let's say if the fund manager decides not to put 65% in equity and keep it lower, then of course it gets qualified as a debt. But if it's an equity taxation, then of course, after 1 year, it's a 10% tax, and before 1 year, it's a 15% tax. But there are some advantages which, these products bring. One is, when you change the asset allocation, let's say if I'm investing directly today in a debt fund or equity fund and, gold fund, let's say market has gone up today. Now, people may be considering for doing profit booking. Now, every time you sell money in equity and put in debt, there's a capital gain tax which has to be paid. So any changes you do in the portfolio, there's a tax angle. But this fund has the advantage that whenever the fund manager does at the fund level, there's no tax to the investor. So I think this is a very big advantage. In fact, a lot of institutional investors prefer this too much of transactions. So I think this is something which is very important. And then what has also happened, Neha, is that from 1st April onwards, you must be knowing that debt funds have become fully taxable.
Yeah.
They become taxable as per income tax slab. The benefit of capital gain has gone away. Now, this category provides that advantage. So let's say if the fund is investing 25-30% in the debt, now normally they would have that marginal rate of, let's say, if someone in higher tax slab of 33%. Over here, he gets taxed at 10% after 1 year. So debt, you get taxed at a lower rate. And I think a lot of people lately have started preferring this asset classes. So yes, answering your question in a brief, yes, it's tax friendly. And so that's why we are seeing increased inflows in this category.
All right. So when it comes to risk, do you think multi-asset funds actually are better for risk adjustment?
So, risk is an important part, Neha, and if we are able to manage the risk, then nothing like it. And this is one category which I believe reduces the risk in the portfolio, and it reduces the risk in 2-3 different ways. One is, of course, the diversification. And when you have different asset classes, at some point of time, one asset class will be doing well, others may not be doing well. Maybe at some
Right.
other point, that those different asset classes gets picked up. So you get
Yeah.
an average return. So overall, you don't get disappointed. So I think diversification is a big advantage. And I think a lot of people, when we look at the portfolio of our clients, we realize they over invest in a single asset class or a single instrument and increasing the concentration risk. So this category of fund gives you that advantage, or it reduces the
Mm.
concentration risk in the portfolio, which I think is a big advantage. Second, Neha, what happens is that the fund manager tries to pick up asset classes which have low correlation to each other. I think when I say low correlation, I mean that, let's say, when equity will fall, you will have assets in the portfolio like debt or gold, which will most probably do well. And a proper diversification or risk reduction strategies, you should invest in asset classes which behave differently. There's no point in
Mm.
investing in asset classes when everything is falling, then the whole of your portfolio is down. It doesn't adds in risk reduction. So portfolio managers or the fund managers of this category are very, very particular about how to pick up the asset classes which behave differently. And I think that is something which helps a lot. Last, what happens in this category, or which is the icing in the cake, is the dynamic asset allocation. So here, what the fund managers
Yeah.
they do is they keep changing the asset allocation based on the view of the market. Let's say tomorrow, if market becomes expensive, they'll do profit booking on your behalf by selling equity and buying different other low risky assets. Or let's say when markets are down, they'll be buying equity. Now, these market timing kind of thing, it's very difficult to do. You need bandwidth, you need time, you need market data, and which is not easy. So
Mm.
they are doing it on your behalf. And research also shows that if market timing done properly helps in reducing the risk significantly. So I think
Yeah.
definitely the risk is lower in this category.
All right. Well, to conclude our session for today, I'm going to take some questions from the audience. I'm only going to take some questions that are related to the topic of the day. But if I feel we can take separate stocks as well, we will take that. Okay, so the first question is by Amrit. Amrit is asking what assets do these multi-asset funds invest in?
So, Amrit, thanks for asking this question. So, by definition, they will at least invest in three asset classes, and they will hold minimum 10% in each asset class. Now, majorly, these funds will invest in equity, and they will have, on an average, let's say 65% being in equity. The second asset class which they will invest and will be debt. Now, the percentage may change based on the outlook of the fund manager. And third, normally we have seen is that, fund managers pick up asset classes like it could be gold, it could be silver, it could be REITs, it could be InvITs, it could be even international equity. So,
Yeah.
SEBI has not put restrictions on that. So normally these asset classes, which are not accessible to investors otherwise, or it becomes difficult, it gets added in this fund, which I think is a big advantage.
All right. The next question is by Namsika. She's asking what is the difference between multi-asset fund and hybrid funds?
So what happens is multi-asset fund is one of the subcategory of hybrid funds. So what SEBI has done is SEBI has said, okay, there's a category called hybrid funds, and which will be neither pure debt or pure equity. There will be combinations of different asset classes. So, for example, one of the hybrid fund categories, let's say, balance aggressive funds, which will have at least 65% in equity and 35% in debt. There's other category which will have equity save, which is known as equity savings, which normally has 20-25% in equity, balance being in debt. Now, this is also part of hybrid, which is not a pure asset
Yeah.
class on its own. It's a combination of asset classes. And in this, there'll be at least three asset classes. Now, majority of the other hybrid funds have normally two asset classes. This has a much more diversification window. And so that's how it differentiates itself from other subcategories of hybrid funds. But to answer your
Hmm.
question, is a subcategory of a broader hybrid fund category.
All right. We have another question that is related to this only. Praful is asking what is a Flexi Cap Fund?
So, Praful, the Flexi Cap Fund is a category or subcategory of equity fund. And normally in the Flexi Cap Fund, majority of the money or 90-95% of the money is in equity stocks and balance being in cash. Now, in the Flexi Cap
Hmm.
Fund, the fund manager has the flexibility of investing in any market cap of the companies. It can invest in large cap, mid cap, small cap based on whatever his outlook is. There's no restriction. Normally, we have
Right.
large cap funds, we have mid cap funds, we have small cap funds. Over here, the fund manager has the flexibility. He can put the money anywhere. And so that's a
Hmm.
flexi cap fund. But majorly we have seen that flexi cap funds invest around 60-65 or even 70% of the money in large cap funds, but they have
Large.
the
Hmm.
flexibility of investing anywhere.
All right. Excuse me. I'm going to take one or two more questions. Akshay is asking about Kalyan. So he's asking a stock specific question. I would like to add one line, and then you can maybe talk about Kalyan Jewelers as a company, not as a particular share thing, but what do you think about the company in general? So I feel that Kalyan is has shot up in the last few days because of Q1. So Q1 results were out. That's why you can see a huge rally in the stocks. And apart from that, I think it has in the last 1 month it has zoomed around 59%, I guess. So over to you, Dr. Jindal. What do you think about Kalyan Jewelers and the whole sector? If we talk about it.
See, I would rather not prefer on the specific stocks, but on the overall jewelry segment,
Hmm.
I'm continue to be bullish. I think the jewelry is one segment which is highly unorganized, and you have a lot of jewelers, and especially this new
Yeah.
generation, the millennials and all, they don't have the time and they don't want to put the efforts to go to different shops and check. They prefer going with the brand, and
Hmm.
so they, and a lot of them prefer ordering online. And so people prefer going to brands like Tanesh, Kalyan and all. So I think uh, the organized sector of jewelry has phenomenal opportunity. And I think as India becomes richer, the vision of India is large. We all are going to become very rich in the coming years. So the segment which is, let's say, lower class in terms of income or middle class, they all will be moving to upper middle class and
Hmm.
higher class. So I think as that happens, the consumption pattern will go up. And the new generation, the
Yeah.
millennials, they want to spend money rather than invest. So I think the demand will only continue to go up. And the only challenge, which I think is the valuation, is what you have to look at, especially in the jewelry and all. This information has already been discounted. This is a known information. And
Hmm.
what I'll suggest to the investors is that if the valuation you don't see attractive right now, look at attractive entry points. If you, whenever the valuation is right, you can accumulate the stocks.
All right. So we'll just take one last question. A guest is asking, can you suggest some multi-asset funds to invest for 10 years of span?
So there are many good asset allocation funds which you can look at. You can look at ICC Prudential Multi-Asset Allocation Fund, has been there for some time. It has the largest asset under management of almost 20,000 crore. Even HDFC has
Hmm.
a fund, and these both the institutions have good fund managers. So I think you can consider one of the two, and you should be doing pretty fine. I think they'll give you good, decent return. And yes, 10 years is a good period to invest in them.
All right. Well, with that, we have reached the end of our segment today. Thank you so much, Dr. Jindal, for joining us on ET Markets live stream and answering all the questions and discussing multi-asset funds today.
Thank you, Nia. Thanks a lot for inviting me to this session. Thanks to the audience for patiently listening to me. I hope it adds value to your portfolio and